Do you think buying Tesla stock will enable you to retire quickly? One of the most popular growth stocks right now is Tesla. Many have expressed their confidence in their potential to retire early from Tesla stock investments alone. You would not want to miss this if you were wishing for the same thing. Experts advise investors not to become fixated on a company's performance in just 3 months. Nonetheless, a lot of people keep an eye on quarterly results since they can indicate patterns end. Support or contradict the opinions of stock experts regarding the future of a company. Tesla, one of the many actively watched stocks, just published its third quarter financial results report. Amidst intensifying competition and various other challenges in the sector, Tesla has provided investors with yet another compelling argument to consider purchasing its shares. Tesla announced adjusted earnings per share of $1.05. Compared to 99 cents per share expected by Refinitiv's analyst poll, and revenue of $21.45 billion compared to $21.96% expected by Refinitiv. Tesla's GAAP net income for the third quarter of 2022 was $3.33 billion, and the company's car gross margins remained constant at 27.9%, which is the same as it was in the second quarter of 2022. In the same time frame previous year, Tesla declared $1.62 billion in earnings. The carmaker's cash balance reached a record $21 billion last quarter, with operating free cash flow of $3.3 billion. During the scheduled results call, Tesla executives also answered a wide range of queries, including those about macroeconomic issues and CEO Elon Musk's potential takeover of Twitter. Musk also went into great detail regarding the company's plans for the 4,680 cells, FSD, and other highly awaited Tesla products like the Semi and Cybertruck. Despite this, investors are more confident that their Tesla investments will enable them to retire early. As a matter of fact, during the final quarter of 2021, Tesla's stock price increased by over 50%, and the company's market capitalization surpassed $1.2 trillion. According to CNBC calculations, even with the recent setbacks, a $1,000 investment in November 2020 would only be worth roughly $2,940 in a year, a return of 193%. Thus, you would have almost tripled your investment if you had bought Tesla stock in the aforementioned year, when it was only little over $400 per share. If you could have gone back a few more years, your return would have been much higher. Tesla's share price was trading at about $38 on November 2nd, 2016. Thus, a $1,000 investment would have appreciated to $3,255.5% by that point, would be valued at around $31,286 in 2021 alone. The S&P 500 index would have returned 142.4% over the same time span. You would have received a 5-figure return on your investment if you had bought Tesla in 2011. In those 10 years, Tesla expanded its product line to include the S3X and Y in addition to the Roadster. In addition, it unveiled the Cybertruck and Tesla Semi, though it hasn't said when those cars will go on sale. With the price of the stock rising from 5.74 cents to $1,229 over time. A $1,000 investment in Tesla in November 2011 would be worth over $24,000 today, more than a 20,000% return. If you had made a comparable investment in the S&P 500, your return would have been 357.4. Naturally, this does not imply that investing in the SP is a bad idea. It's actually the ideal location for most people to invest, according to most experts, including the renowned investor Warren Buffett, because it holds every stock in the index, automatically diversifying it. Nevertheless, there is no denying that Tesla has experienced downturns, and there is no assurance that there won't be any more. Experts, however, believe the future drops will be quite slight. The question of how many shares you should have to retire in a few years is another that just has to be answered. An average person needs almost $1.7 million to maintain their quality of living in retirement, according to a survey. You will need to acquire 850 shares by now in order to retire by 2027. Assuming that the price of Tesla stock hovers around $2,000. That amounts to roughly $600,000 given the current price of Tesla stock. All investors can do is hope Tesla meets or exceeds their lofty standards. To find out the precise performance of Tesla stock, visit Moomoo. It's safe to say that Tesla has established a solid reputation for itself in the market by this point, and the electric vehicle manufacturer looks to be headed for further success. Because of this, Tesla might end up being a wise retirement option in the not-too-distant future. Medi. Tesla bulls hope to retire wealthy as devoted Tesla shareholders and support the company's vision of a cleaner, greener Earth. The median American retirement income, according to annuity.org, is approximately $47,500. This means that in a Western nation like the United States, one would need to make at least $4,100 per month in order to live comfortably in retirement. In the meanwhile, people who reside abroad or intend to retire there may have far less money when they do. A lot of Americans decide to take advantage of geo-arbitrage and extend their retirement funds by moving to other countries such as Thailand, Portugal, Costa Rica, Mexico, and Panama. But if you would rather stay in your present nation and require at least $4,000 per month to live well in retirement and wish to do so by 2030, then the required minimum amount should be raised to around $50,000 in order to account for inflation. You will require a minimum of $1 million to provide $50,000 a year in retirement income based on a conventional 5% withdrawal rate. Your money will last you 20 years if you keep spending 5% of your retirement funds. If, after today, you receive no further income, the EV company is making every effort to demonstrate its viability to investors and detractors alike. Actually, Tesla has a ton of creative ideas planned. Among these is Tesla's strategy to produce a sports car, use the proceeds to produce an affordable vehicle, and then utilize those proceeds to produce an even more affordable vehicle. They also intend to offer choices for producing electricity with no emissions. Additionally, Tesla intends to evolve into a data and AI firm. After all, Elon Musk, the CEO of Tesla, has said time and time again that the firm will be primarily recognized as an artificial intelligence startup. The business has been concentrating on developing solutions for real-world AI, and on AI Day, it unveiled the Optimus humanoid robot. Furthermore, as per ARK Invest, Tesla's prospective robotaxi business line is a significant contributor, accounting for 60% of the anticipated value and over 50% of the anticipated EBITDA, or earnings before interest, taxes, depreciation, and amortization in 2026 throughout the simulation set. Though at much lower margins than the revenue from robotaxi, they anticipate that in 2026, electric vehicles will account for 57% of the company's total revenue. Additionally, Tesla's business is still doing well. A growing number of investors are concerned that the worldwide competition for EVs would destroy demand. However, Musk said during the most recent earnings call, it's important to note that we have great demand for Q4 and for as far as we can see into the future, we anticipate selling every automobile we produce for precisely this reason. The business has invested billions of dollars in the construction of 2 new manufacturing sites in Texas and Germany, in addition to modernizing its Shanghai facility. At full capacity, that China plant can currently build 1.1 million cars a year. With a monthly record of 83,135 units in September, it got closer to that run rate. Additionally, the business has stated that there is a greater demand than it can meet for its energy sector, which includes solar rooftops and battery storage. In the third quarter, sales from that division accounted for 5% of overall revenue. Despite challenges in the supply chain and logistics, experts think the business is doing well. Because of shipping delays, Tesla produced 22,000 more cars in the third quarter than it could deliver. In the fourth quarter, the cars will belong to the customers, although the business expects manufacturing to reach that level of growth. That issue may lead 2022 deliveries to fall short of its 50 annual growth target. Even though valuing equities on their own might be challenging at times, it becomes even more so when it comes to Tesla. On the one hand, the company's long-term expansion plans are met with enthusiasm. On the other hand, there is the immediate discussion over whether Tesla will be able to fulfill its production targets in 2022, given supply disruptions and China's shutdowns due to COVID-19. The good news is that if the company continues to grow, the value of Tesla shares will increase over time. Thus, your funds will last for a very long time. If investors wish to retire by 2030, buying Tesla stock is likely the best option available right now. To get more content about Tesla stock, subscribe to this channel.